on June 5th for 71,102 at 8 p.m. and it looks like it closed out later, a day later, at 70,625. Once we pull up Bitcoin, we already have the entry point marked out here at 7:54 p.m., which is on this candle here. As you can see down below, that's 7:54, and then the closeout happened over here, where the closeout at around 4 p.m. at 4 p.m. in the afternoon. Is that afternoon? 4 p.m. Yesterday, 4 p.m. Yeah. I wonder why that's not like army time. Isn't that weird? Okay. So, because that's PM right at that time, right? Okay, so this is where the 70,630 came in. So obviously here we never hit that level, so he had to hit, and he got out here. So the question is, when he entered this trade, he was going long, right? It went long, it came down, it stayed in the trade, and it hit this high level up here, and then it eventually dumped on it, right? So let's go here and find out, you know, from this peak to this peak, what his entry or what his take was. So this particular move ended up being a 0.84 move. He only has a 30x, right? So anytime that we're trading, this is why we want to trade in the 50, especially Bitcoin. It's a bigger coin, so you want to have a higher leverage on it, normally about at least 50 to 75x. But what happened here was he only had a 30x on it. So what it means is every 1% it's only going to move 30%. So this 0.84 was equivalent to about 27% in profit, and then it went down on him the other way, which gave him a how big is that move right there? Yeah, and I'm trying to see why it would lock him out of there, because that's only a 15% stop loss right there. 20% loss. So that was his 15% stop loss. So what happened here was, more than likely, he probably saw on his original move that he had reached a 27% profit mark. And then what he does is, instead of having his stop loss that's originally set up for like 40% stop loss, he moved it, because once you go positive, so once you hit a 25 to 27% positive move, you're supposed to move your stop loss to your entry position, or at least to a negative 15 position, because you don't, at that point you're already high enough up that if it does pull back, it shouldn't pull back that far unless it's going the wrong direction. So you don't want to lose 40%, which is your original stop loss. If you've already gone positive by 27, you want to move your stop loss up, because what that does is, when you do lose, everything that's calculated is calculated that you're set up to lose 40% on a trade, and your average is win 7, lose 3, right? Now the secret is, as you get better doing the same trades over and over, you're going to learn how to execute the trade better by, instead of losing 40% on each of those 3 trades that go bad, you only lose 15, or you take in a small number. So you either lose 15% instead of 40, or you lose, or it stop losses at your entry, or you move your take profit to at least 10%. So that way you're not losing that 40%. You're more like 15% or 0, right? So what that does, it helps you actually gain profits, because your losses, even though you lost, they weren't as much as they could have been, right? Make sense? So it's a little bit, yeah, it's just a lighter loss. So instead of losing $4, you lost $1 or $2, right? So what happened here is his profit hit, and it moved up to 27%. He moved his stop loss to 15, and then eventually it didn't actually get to where he needed it to go, which would have been, if he's aiming for 50% profit here, right? That means that it would have to do a 1.4% move, which is right about here, because he's only has a 30x leverage, so that'd be 30%, and then he would need another 15%, so 1.5, Yeah, so he'd be up in, he'd have to buy one of maybe a 1.72, something like that. So this is the mark that he needed it to hit in order to get his 50% profits, because he only has a 30% leverage. So on Bitcoin, you want to make sure that you're at least trading at least 100 or 50 to 75, right? Because if he was trading here, and if he would have had his 75 on here, right, then this would have hit his 50% gains. He would have hit his target, because he was only at 30. He only got to 27%, and then it went the other way. And unfortunately, he had moved his stop loss up because it hit 27%, and then what happened was it ended up pushing up, and then it went down. But he needs to adjust the percentage on that, so I need to get with him on that. Anytime using Bitcoin or a bigger coin, you want to make sure you're using the at least 75% leverage on there, 75 to 100 on there. And that's just Bitcoin. Anything like Bitcoin's like it's 60,000. It's a $60,000 coin, so it takes a lot for it to move. So you need to make sure you have a 75x leverage or 100 on there. Every other coin, Ethereum and stuff like that, you can do 50 and so on. So that's kind of like the only thing I can see here as far as like how that goes. So the only thing I'm going to do here is do a quick check on his entry. So at this point, it is just coming down to making sure that he had some type of reason to enter this trade. So I'm just going to mark an arrow there, and now I'm going to slide to the basic 1 hour, right? And what I'm doing on the 1 hour is I'm just checking to see if the 1 hour trade was something that showed an entry point for him. Let's see here. All right, so here's his June 5th trade here, and normally what he would do here is he would be entering on a green trend or green moon, right? So that's kind of where I'm trying to find the entry point here for him. So I have a green trend, and make sure, guys, when you use your candles, go up here, make sure that you're on the Heikin Ashi candles. So click on the two candles, go off of candles, go down to Heikin Ashi, make sure you're on there, and that way you can see them. So the two trades that he has is he has a 1 hour moon, right? So let's kind of go over a basic entry for this particular trade, right? So this original trade happened way down here, which was simply a green moon on the 1 hour and a green trend. This is the original entry section here, and then as you can see, that literally just ran up the entire way, and then the 1 hour got a red trend here, and then ended up coming down. So that's the trade that you want to be in, a simple 1 hour moon, 1 hour green trend, and just ride that up. All right, so I don't see a green trend here, and the problem is I also, here you have where you can get in the moons, and let's say you're coming in late and you see a red moon come into a trend and it resets. The next time the green moon comes in with a full RSI moving to the top, which would be here, here's another entry that you can take into this play. But right here, I don't see the entry that he should be taking, because he has a red moon. The RSI is coming down. The RSI hits the bottom here, which would be, kind of his entry that he wants. But that would have played out to where he should have entered somewhere in this zone here when the RSI crossed over, and then he ends up getting a green moon here. But he's kind of already, like, you see how this is already kind of played out here. So what I would be doing at this point is, because it's already had so many moon resets on there, it's already pushing so much value. There's only so much money that can go into a coin. It's kind of on the heavy side of being picked up. What I want to do is I want to check the other time frames just to see if we're trading, with, the right zone. So if we look at a 2 hour here, 2 hours bottom, so that's good. Take a look at the 4 hour. Alright, so that's kind of our problem. You see how the 4 hour crossed over here? And it's starting to head down. See right there? So, well, the bigger time frames are kind of like your example of what's to come, right? They're going to be, each candle is 4 hours, so it takes longer to show up, but it's letting you know like where it's at, and it's full circle. So at this point, when the 4 hour crosses down, that means that there's been a lot of money in there, and that the sensitive is starting to become that people are feeling like, well, there's just a lot of money in there right now, so why would I invest in it, right? Because they always need a pullback to invest. So at this point, the 4 hour is already crossed down, and we can see here that it had already made that move. So this is a classic short. The 4 hour is headed down, so what you should be looking is for pullbacks. So as soon as this crossed over, which would have been almost, I want to say, so you're not going to see it cross over until the next candle, which would be here. So this section right here is the actual, and I'll make it yellow. That's where he should have been looking for shorts. Right there is when that 4 hour crossed over. See? See how it lines up right there? There's the 4 hour. Because you're not going to see until that connection happens. That means that candle has to hit, and then it'll show you that this part will auto fill. So it'd be somewhere off this section here, which would be where we would start thinking about a short. Then what we would do at that point, once we start looking at that short, we'd slide into the 2 hour, and we can see that the 2 hour is starting to head down in that area right there as well, causing a short. So we would be looking for a short move here, right? Now the plan is to always let it have its two moves, right? So this first arrow here shows you where the 4 hour and the 2 hour start to head down, and they create this small little pullback right there, right? What happens is a lot of people see that pullback and they trade and they try to make the next move here, right? Now that once they do that, that's where you get these things called double tops and triple tops. This is a double top, and then the triple top is over here. What happens is retail investors buy this bounce. You see how the 2 hour is coming off the bottom? They think it's going to reverse up and be big, but because the 4 hour is already headed down, there's no momentum in that direction. So it creates a small jump, and that's why it only went that 70 some percent, right? After that happens, the second move comes in, which is the bigger pullback. So that's actually where he should have been looking right here. When this 2 hour pushed up and started to come down, right in there, that's where he should have been thinking of a short position. Now the thing is, once you start playing with these trades, you're going to start, going, okay, I'm going to take advantage of this pullback here. But what you always really want to happen is you normally want the RSI down here to be at the highest level of what you need to happen. So this part up here, this one up here, would be a better example of taking the risk of a short, would be off of here. So somewhere off of this candle would be, because the RSI had an opportunity to build momentum. Alright, and you can see that you ended up getting a 2 hour red moon alert right here, right? So this is why once you start getting alerts, you can go back and look at the pattern and start realizing that everything makes double moves, and then once it exhausts itself and tries to make a final push, you start to work your way into the pattern that fits what you want to happen, right? So this was the beginning of the pullback. We didn't get that much of a pullback. The 4 hour is pulling back as well, and then the 2 hour bounces, shows very weak volume, comes back down. Okay, now we sit there and go, oh, okay, that looks really weak. So now the next time it pushes up, we can notice that there was a very weak push. It literally just made a triple top. So the next time it starts to head down, which would be that 2 hour moon, that's the short that we want to take, because more than likely the odds say that this pullback is going to be twice the size of this little one. Make sense? But at this point, there can't be a long here, because the 4 hour is already headed down. So even when we get to this position, the 4 hour is headed down through this entire process. So you want to trade with the 4 hour position. The only long that he would have had here is when the 4 hour goes to hit the bottom here, which is right past where he entered. And yeah, so the only one that he would have is that he would be going off this candle here, and he'd be trying to play this yellow arrow right here. That would be the only trade that if he was thinking about going long. because that's where the 4 hour bounced. You see how the 4 hour bounced there? So that 4 hour bounced from the bottom and created that one section here where the see how the yellow arrow went to here. That is the one little section where you could have played the bounce, because now at that point the 4 hour is going up, the 2 hour is going up, the 1 hour is going up. You have all the big momentum in your favor. You could have played some type of trade there, and it moved about a 1% move there. And this is where I say, like, even if you're playing the trade correctly, you can take a loss there. That would have hit the 1%. If you had a 75x on there, he would have hit his profit again. But once that 4 hour starts to bend and shows weakness again, right? You see how it doesn't get a 4 hour moon and it starts to head the other direction? That's when you need to be proactive and say, okay, this is becoming a short here, because it's not able to build up momentum anymore. So that's the difference on how to, like, once you start posting your mock trades and your other trades, then we'll be able to go back and look at the patterns that are happening. So then you can start seeing them and going, oh, okay, I'm starting to see what this does, right? Because what you're going to be learning is what the retail investors do all the time, which is watch a move happen, wait for a pullback, enter the pullback, and take the bounce. They call it retracements. They call it finding support and all that other shit. The problem is you never know how high it's going to go, because there's no reason to buy and it doesn't have any value. So what we do is we hunt these moves, and then once we see their move is too weak to do what they think is going to happen, then we pounce on their pullback move, and we take advantage of that big short that happens, right? Because this short right here was the nice little pullback short for 2%. So if you're doing a 75x, you took in 150 right there. So that's the basics of, like, seeing where you need to get in, right? And how to get a long on here. Well, the longs are just basically trading with your 4 hours and getting into your early 1 hour moons and early 1 hour trends. Once those trends kind of like run for a while, they get exhausted. There's only so much money that can go in a coin, and you got to start thinking the other direction. I know when Bitcoin breaks 70,000, everyone's like, it's going to 100, right? It's just not going to happen. You just have to start realizing that there's only so much money, and until that market cap starts to double and add a $1 trillion every once in a while, Bitcoin's not getting to 100,000, right? It needs a market cap. So that's kind of where that's at there. So here's how we can, once you post your trade, we can go back and look at the trade and then dissect where you should be looking to get in, and then understanding that the game is this. The game is to get to where every single time you make your trade, you're making 50 to 150% profits. And then once you do that every single time, because you're just following a very simple pattern and structure, and your indicators are laying out what's happening in front of you, and you're like boom boom, and you're able to dissect it to like where you're like, okay, this, perfect. Okay, I just need that to happen one more time. Okay, that lines up. Okay, oh, this is the one. Boom. Right? It only has to happen 3 times a week, because if you're doing $1,000 or $2,000 on a trade and you're guaranteeing yourself 70, 50 to say 50 to 150%, I mean, if you only take in 30% on the worst case scenario on a $3,000 trade, that's 900. So if you do that 3 times a week, that's about 140,000 a year. So you don't have to be chasing trades. You need to be mastering situations, right? And then once the situation plays into your hand, you just make sure that you take advantage of that situation. That's what it's all about, watching it play out. And then once you start to realize that every move has the move and then the second move, and if that second move is kind of weak and you're watching it build up, then you're like, oh, just going to try that again. That next move up is weak again. Now we know this next move is going to be coming down even further, because the people who are holding Bitcoin at that time are realizing that Bitcoin can't break that 71,000, and they're just like, this is the 3rd time it's trying and it's failing. They're going to sell, because they know that the market makers have one thing: they have to create space from one point to another that creates money. So they need spaces. That's why there's support and resistance lines, right? And what retail investors do is they just guess on where the market makers want to take the price. They want to take it down 4%, 6%, 8%, 12% in order to restart the move to the upside. Right? It's all guessing games, right? But when you're following your price action and your movement, then you actually know what's actually happening there, and then you can adjust to what is supposed to happen. Most people here went in on these longs here because they thought Bitcoin was going to break up to what's called if I was drawing a line here, there's a trend line that sits on the top of Bitcoin, and it's off this little line right there. So everyone was shooting that Bitcoin would jump up to here at about 73,200, and instead what they did was they dumped it on them. That's why you hear all those things about 300 million liquidation, right? It's because people just, I mean, they just don't understand. Once there's no money to do something, they're not just gonna, they're market makers. Their job is to make money. They're not going to go, there's no more people putting money in Bitcoin. Let's put 400 million in. Now they're going to dump it and take out, 150 million. They do the opposite of what you hope would happen. So that's kind of where you're at there. So what you want to start doing here, guys, is just start putting in your trades in your 10 trade review, so we can go back and make these videos here. And then once we start to find a pattern in how you guys are making trades, then we'll simplify a video and focus in on how to just correct the one mistake everyone's making. Right? So the one thing about Jim's never traded in his life, and he's just started literally put in 1 hour a week for the last 3 weeks, and he just started trading. So he's already, here's 47%. 18%, 50%. So now that we're seeing him trade, we just need to make some adjustments, like the coins that he's picking. He's doing a 20x leverage. He needs to stay around a 40. That was a great trade. This one I wouldn't do if it's only 20. But I mean, there's nothing wrong with 47%. So he's doing a really good job for a guy who just got TradingView last week. So this only mistake here. This was actually a winning trade. He was just a little off on his entry. There was no reason to get in the entry he was in, so I'm going to go over it with him on why he got in that entry. But if he was paying attention, there he would have caught that Bitcoin short, and that would have been a massive trade for him right there. So he's a new guy learning, so he's just picking up some pieces there. So, but that's where we need to start, guys. You need to just, in order to kind of like advance to where we are, in order to get where we can just start posting some feedback there. We just need the people to start posting their trades, or when their alerts go off. So when your alert goes off, put it in there, and then we'll do a video on when your alert went off for your 1 hour trade and how you could have made that trade. And then that way you're getting the information on, okay, so when that trade happens like that, that allows me to go look at this, double check my entry. Okay, that's where I enter, and then I let it happen.